Here we go. I am JB Bryan, and this is AfroEconomics, provided by JB Bryan Financial Group, a registered investment advisory firm. And we do so much that sometimes we forget, even I do, to remind you that as an investment advisory firm, I spend my day helping you invest and build your future and meet your financial goals. So I just talk a lot about everything because it's amazing that your financial goals are impacted by so many things in your life. And that's why Afroeconomics has the 10 principles so that we can just continue to look at our life holistically through our whole life, right? We got to make sure that we look at everything. But tonight, I wanted to talk about like where I started from, what keeps me excited every day is the investment part. But I know that we spend most of our time talking about getting a solid foundation, like making sure that we have everything in order, from our debts, our health. But once we have all of the insurances, all of that all set up, the icing on the cake is the investments, like where we put our money to get a better return than just a savings account. But if invest after we have all of our debts paid off. And a lot of times that people are accumulating, investors are not members though, not you all, but they're accumulating debts faster than they're actually investing and saving. They're buying things, getting a car, getting a bigger house, getting more, buying more clothes, finance, credit card balances are going up faster than the actual investment balances are going up. So I want us to be conscious that I'm looking at that. You should be looking at that because if you avoid the debts, we really don't have to worry about, am I going to have enough money when I retire? You feel me on that?
Yep.
Right. So we focus on minimizing the expenses, accumulating more assets. Wow, what a more peaceful life that it will create, and you'd have so much less pressure on your actual investments, that you wouldn't have to worry like, is this going to go down? You would be able to focus on, I'm not going to need this but for 20 years from now, or I'm going to need this next year, so I have it set up correctly. So then there's key terms that are involved in that. But before we do that, I want to talk about the news and what's going on. I thought it was interesting that since let's just say the last 10 days, that there's been a lot of action, and this is for information purposes only. You all know that I'm licensed. This is not soliciting or encouraging you to make any investment decisions. I need to speak with you individually in order to give you investment advice. This is not investment advice. So this is just information, empowerment, education. But has anyone that has their microphone open, have you heard about what's going on with GameStop? Like there's,
Yeah.
like,
Yes, ma'am.
Yes.
and then is there anyone that feels really confident about that? Like there's been a big movement in GameStop, the company's stock of GameStop. I'm saying STOP, GameStop, the store, and their stock has been going crazy. And the amazing part about it, the only reason I wanted to talk about this is that regulators are stepping in because individual investors through social media are costing the institutional investors. Like, and this is probably the first time in history where individual investors have actually cost the larger investors, because generally we're dealing with the impact of larger investors getting most of the benefit of market movement. But this time, this particular time with GameStop, they were expecting that the company would continue to move lower. The stock wasn't doing anything. So does someone know what was going on? What's going on? Do you want to share?
Well, this morning on Good Morning America, I can't remember the gentleman that they had on, but they were featuring about GameStop and how what they were doing was they was trying to encourage people to invest in the stock. So then they would take so their money would rise and they would take their money out.
No,
So
no, no. It's actually the exact opposite.
it's
It's
the
actually
opposite.
the exact opposite. That's why this matters. What happened was the institution. That's why I'm glad that you said that, because it's very hard for the average investor to understand what's going on. But this is the very rare time where the institutions were anticipating that the value of the stock would go down. So the small investors are all grouping together and pushing it up. And it has caused a over $23 billion loss by the institutions, the hedge funds, and everything that were expecting the stock to go down. So somehow it became publicly available that these are a list of companies that have a lot of short sales. It's called short sales out there, meaning they don't really even own the stock. So they borrowed the GameStop stock in hopes of buying it back at a lower price. So they were saying, I know the stock is going down, and it's worked for them. It's kind of like something works for you every time you got this. They closing stores. They ain't gonna make it. Like when I saw the story, I said to Mike, aren't they closing stores? It was like, so I know like there has to be more to this. So, actually what is happening, look, and the excuse that the regulators are making to stop this from happening is that they're saying they want to protect the individual investor. That's the nonsense about it. And everybody needs to make sure that they, if they're involved in this, I hope that they're going to contact their Congress people about this, because this is, where it's amazing to me where we say that we live in this capitalistic economy, but yet you have where regulators can step in, and TD Ameritrade stopped it and started doing restrictions on the trade, basically saying to small investors, we're not going to allow you to make that much money. And then but all of them were like just getting together. There is no earnings there. And we know that historically this has happened before, but nobody cared years ago when people were just individually going broke because they were buying companies that they were being misled about. So this is a situation where they know there's no earnings there. They understand what GameStop does. The PE ratio, as the price to earnings ratio, is null because there's no earnings there. There's nothing to divide the price by, so there's you can't, so it's that the point is that, but they've pulled it together and they've made these companies have to pay more for the stock than they wanted to. So it created losses to cover what they borrowed. Isn't that amazing?
That is amazing.
So this will of course, this will be the last time. It won't happen. Isn't it sad when you think about it, that we're supposed to be living in the free and, you can do this. They're going to, I mark my word, that they are going to regulate the use and information on social media, about how they're sharing information. Because what happened with Elon Musk, he saw what was going on and he shared it to the general public. And the numbers really took off of people buying it. So what it was doing, it's not so much as the individual making money, because when it's moving up every time, time like that, like somebody has to buy it to make it move up. You feel me? So they're buying it at higher and higher prices. But though only the person that has it at the extremely low price is really getting the full benefit of it. But I think that they just appreciate the opportunity to shift the control. To shift
JB,
the
you have a
control.
question about it in the chat. Some questions in the chat.
The you didn't want to read it.
Oh, I mean, I can't.
Exactly. No,
Were
it was
they
the Roseland.
investing in puts
exactly.
and calls?
They were actually doing short selling, you know, so they were doing shorts. So they were borrowing it. They weren't actually owning the stocks at all, you know, and there's also a whole bunch of other companies that have a whole bunch of institutions that have done this with theirs. Private equity companies, they're just going out looking for companies that they're anticipating. Like Ms. Davis says, in a natural world, you think that they're looking for them to go up, but no, they were expecting them to go down. So they said, oh, wow, look at all these people out here short selling, this institution short selling this. This is our chance to get them back, for they've been controlling the market. So then I was like, you know what, let's control the market. And if you base it on historical performance, they're going to go down. They're going to go down. And you were asking the small investors joining together, becoming major investors. Exactly. That's what happened. And these are just small. And if you're making a major move together, so you end up being an institution that's way bigger than the other institutions, because you're all moving together in that movement. Imagine if we did that about things that were really important to our community. But the only way it works is that we all move forward together.
Yeah.
That's, that's the metaphor there. But because a lot of people are betting against your success, betting against our success, betting against my success, so how about we pull together like we are, and help each other be successful. And that's what happened. These institutions were betting against GameStop's success. So they expected, the only way for their decision to short sell to work out is the price where they actually buy has to be lower. $23 billion loss in a couple of days. They might be acting like it don't matter, but it matters. That's huge. And they got a lot of clients to answer to for that. But that is interesting. Let's look at some terms. But that was, I think that I would really be missing out on just sharing that, because you're going to hear that come up a lot. You're going to hear it come up again, like was on the Ms. Davis was saying, it was on the news this morning. And then now let's listen for words like short sell, what that means, the institutions, when they short squeeze is what happened. They made them have to go back, because they got fearful. You're afraid, because the higher it goes, the more out of the money you are. So from the institutional perspective. So this is amazing how it's going. So we'll keep an eye on that. But I personally don't suggest for any long-term investor to be considering that, because so just as an opinion, make sure that you keep your eye on your long-term goals. And in order to do that, you're going to miss out on some short-term opportunities. But Ms. Missouri, I don't see the market as a casino, but a lot of people and a lot of groups out there, they do. So, I focus on wealth development, but there's always going to be place for people who are just trying to make quick money. But the thing is, every time you're making quick money, you got to figure out what to do next. You can't try to make quick money and then take a buy and hold strategy. That's not quick money. So there's a whole bunch of people who try to be greedy, and they know that you're taking a gamble anyway, right? So gambling can work out for you, but you can't stay in the casino all the time.
Right.
Right?
Yeah.
No, it can't be your place of employment. I wouldn't suggest it anyway. So let's look at the some of the terms, like some of the things that I just mentioned about price. You ever heard like PE ratios? Have you know that I remember when I first became a stockbroker, like the PE ratios were like treated as if they were like rocket science. You know, if the PE ratio was between 0 and 10, then you know what maybe what are you looking for? What is the industry average for the PE ratio? You know that maybe the PE ratio of 0 to 10 is good, you know, for that particular industry. Where I mean, Amazon has a PE ratio of over 90, and that's seen by a lot of experts that is, you know, you shouldn't even consider it because it's too high and there's no growth potential there. I mean, literally Amazon, like, you know, so it's like you really. I think that the PE ratio can tell you when you're comparing two like kinds to try to see their price divided by their earnings. Um, and if their price to earnings ratio is lower than their competitor, it really still wouldn't tell you that much. We've got to go past the PE ratio because the prices, you can have a price that suggests that if your PE ratio is low, but that could be because you haven't done any stock splits. And you can do a stock split because we're talking about the price, and then and make your PE ratio look higher, you know, because your price per share is lower, or you're hiding your earnings. So we have to look at all the numbers. We have to look at all the numbers. So if they did the stock split and the earnings stayed the same, then their PE ratio would actually go up, and it can make them look like they're not as good, you know, a buy, or the value is not there anymore. But you have to know, well, no, they just did a split. So it's the fundamentals are good to know. That's what, like the PE ratio is considered a fundamental versus watching charts would be considered technical analysis. But we have to um, just know that it's not really cut and dry. Like this PE ratio is great and a 90 is bad, and a lower one, you know, and a 30, you know, on Facebook means that that's wonderful. You know, I really feel that we just need to focus more on what is the future potential for this company? How well is it managed? You know, and looking at the charts and how they grew over time, and, you know, is this the lowest low? That's cool. But when you're in it for the long term, you know, do these short-term changes really have the same significant long-term impact like a company that is well managed, a company that has a good standing in the community, a good commitment to environmental, because you know that there's going to be a lot more regulation coming up. So if they're known for just, you know, being sloppy and a lot of safety violations and things like that might be a company to stay away from. But that's going to take, you know, a better understanding, not just PE ratios. But I think it's important to know that price of the stock and earnings, you know, can help you, especially when you're comparing components of the same industry, if you're looking at individual stocks. And then a prospectus. What about that term? Have you all heard that term, prospectus?
Yes.
Yes, right?
Yes.
A prospectus will be issued on, you know, a lot of the financial products that you'll purchase. But when you're doing brokerage accounts, you'll get you may trade and then get the prospectus in the mail. It might not, like back in the day, everybody was printing out prospectus and you would have like a nice cover. You remember those? They have like colorful covers. Everybody would get one. Now nothing is printed out. You know, I mean, it's rare. You know, if I get a link or something, you know, in the statement, but the prospectuses still have to be made available to give you the expenses, especially in those full load mutual funds, annuities, especially a variable annuity. You know, but definitely we need to know that word and look at it, because you can have the same fund, and only in the prospectus would you see that you purchased it because of the class of fund that you purchased it with a 5% sales charge, and you don't even know it. And then you could have had a different class, and it could have been a much lower, possibly, or and that like is a lot. As an investment advisor, that's a challenge a lot, because I hear people often say, they go, oh, they didn't charge me any fees. And I go, well, that could mean that they don't have an investment advisor's license, or you don't have an investment advisor, you have just a registered rep or something, because they make a lot more money off you by having a fully loaded fund than having a fee-based account like my members have, because the only fee that they're paying is the fee that is disclosed to them, in most cases, unless they wanted to have some full load fund. But a fully loaded versus a non-fully loaded, right? But ETF has no load on it. Well, the sales charges, I should say. So sometimes, especially our community, we're presented with products that have the highest sales charges that I've seen in the industry. I've seen no load funds being put into products like the Primerica funds. They'll take that no load fund, put it in the Primerica product, and then add, I've seen as high as 8%. And I hope that I've seen some of them come down now, but they still were in the 5s. And you're talking about how many people in our community that are paying that, and they think, oh, I don't have any fees on my account. Lord knows if they were charging a fee too, you'd really be in trouble. They're making more money than any fee-based advisor just off a mutual fund. And they're not regulated to work, that they have to work in your best interest as an investment advisor would have to do. And any fees that you're paying have to be disclosed on this side of the business. But so we need to understand what we're paying. That's what the prospectus is for those, and they're called fully loaded funds, versus ETFs, which I use in my portfolio, don't have any loads, no sales charges added on to them. Any questions on that, y'all? No,
So
Mr.
load is
Bosby.
just another term for fees.
That's right. No, it shouldn't be even associated with fees, because but they'll probably have some, because they might have an investment advisor in there inside the fund. So it'll be fees, expenses, and marketing and everything. That's how they get the pretty glossy covers.
Right. They could keep that. Just give me the earnings.
I know, right? Just give me an investment advisor. Because remember, I was saying, and Biden hopefully will, go back to that Obama had decided that you could not have a retirement account with anyone but an investment advisor. But as soon as that had been decided, then he went out of office. So all of that got broken up. But he was saying that in order to really watch out for someone in their retirement planning, it needs to be with an investment advisor. But the majority of our community is not dealing with anyone like me, which is sad. I mean, huge majority. And so also let's look at the asset allocation versus diversification. And diversification is how we spread things out. But you actually could be diversified across technology stocks, but they're all in the same asset class of equities. They're all stocks. Stocks and equities mean the same thing. So the asset allocation is taking diversification to the next level. And when we look at the research, it says that the overwhelming majority of your return comes from your asset allocation, even though most people think it comes from the specific investments that you choose. But they have, studies that prove that it's really more about the asset classes. So you choose to, that 100% of your portfolio is in stocks, then of course your volatility and your long-term performance, if you could index that with the S&P 500, versus if the majority of your portfolio is in bonds, you will perform closer to the bond index. But if you have like corporate bonds and high yield bonds, like you're on a whole different level of risk, but you're still maybe in the bond class, you're in the bond class, but you can diversify across bonds, but you're all in that same asset class, but you're diversifying within it. So diversification, we confuse sometimes with asset allocation, but asset allocation is taking your diversification to the top level, having stocks, bonds, cash, real estate, how do you go across, what percentage is across each asset class? Like if we looked at it, it would be easy to say that for our community, that the majority of our asset class is in our residential real estate for those who are homeowners. So if residential real estate doesn't do well, that's how our wealth doesn't do well. If residential real estate for our Black communities goes down, then Black wealth goes down because the overwhelming majority of our assets are in the residential real estate. You feel me on that?
Mm-hmm. Yep.
But if it were in the S&P 500 or in the stock market where 90% of Black wealth were in there, what would we be looking at? A whole different situation. But we're not, that's not us. But that's, that's asset allocation and why it's important to understand that, because I meet people a lot and they'll have like 10 different stock funds. And these 401ks, those little computers where they say, pick this, and we have to remember that in most cases, they're choosing their worst performer. This is sad. This is sad. Like, don't get mad at me, regulators, but this is true. That you have, like, you're in your work retirement plan, except for the federal government, you know what I mean? Those seeing the asset, those are all like mostly indexed. They're modeling the index, but in a typical, let's just say we're using Fidelity. Fidelity is like the biggest work plan out there now. Like the majority of jobs, hospitals, even schools are using Fidelity. But everyone is different.
Yep.
It's like hard for me to believe, like, how can this be Fidelity and it'll have Vanguard in it? It'll have this. I'm like, so what is happening is they're like picking what funds do we need to increase our assets in? What do we need more? Because the other day I'm picking out the best. And then when the client gets to the company, and this has happened in several situations, I go, oh, okay, that's who you're with. I pick out the best of them. Oh, they go, oh, we don't have that. Oh, that's not in there. Oh, so-and-so. They might have one or two that I chose out of the best of that company. Like the best Fidelity funds are not in the typical 401k.
And why is that? And that's
they don't need your help. They don't need that. They don't need that little money. You know what I'm saying? They focus on institutions.
Gotcha.
They're getting in there something.
Yeah.
But if they need to increase the assets in it's new or something like that, I think they go straight to the employer market, and get you in it.
Gotcha. Mm.
And then they'll switch up, and some of them, they don't even put symbols on them now, so we can't track it. You know, it'll say, stock index. Like, well, which one? Like what? Like what you're in, this is something. It has to be managed by somebody. You cannot just invest in the index. Like if you that the index is a benchmark, not an investment. So even if they do the exact same ones, they have to give it a separate security symbol.
Mhm.
Don't get it. But we need to look at those on the regular. We need to look at what the options are. We need to look at, you know, how your options are. I mean, they'll go and change because of some merger or something, and they'll switch everything you're in or put you all in cash. Look, and this is the worst one. Just take your beneficiary off because they switched companies and you don't even know. Like I've seen that, I mean, a lot. Like with Philip Morris and Fidelity, anybody that's been there a long time before they switch to Fidelity has no beneficiary. So if you listening, you better get it updated. That is ridiculous. How can you, you know, you can do that when the person's coming into work. We need this on you. You know what I'm saying? Like, I know you had it, but you've been here too long and you get punished. So here, you know, but no, you can't even do that. You just don't care. And so people are dying and they don't have any beneficiary. And it happened to a client, her sister was, you know, working there and did not have it. And I said, I know how that happened. Do you know how much legal paperwork you have to go through when
Yep.
there's no beneficiary for a single woman?
Oh, it's awful.
Exactly. Like, so we have to stay on top of it. And I'm just thankful that that God led me to start doing AfroEconomics because it's about meeting you during your career versus meeting you at the end of your career. The only heartbreaking part of it is I have to prepare myself, unfortunately, that a lot of people, when they're with you all your life, it's kind of like, you know, having a living boyfriend or girlfriend, right? And then when they want to get married, they marry somebody else, you know? So it's like, I want you to marry me. I don't want, you know what I mean, that we're just working together while you're working and then when you retire, you go somewhere else.
Yeah.
Because I'm gonna do something new. You know what I'm saying? At least when you do something new, make sure you check out what you got. Because generally, really, if you look at everybody you know, when they had somebody that was with them forever, and then they just said, well, you know, I'm gonna try something new. I mean, really? Did it really get better? Did they really? Tell me one time. Tell me one time. Did they really did they really go up? Did they really go up, right? So we have to like, you know, really think about like, you know, that like when somebody's invested in you, you know, like make sure that you look out for yourself. Look out for yourself. At least make sure you consider, you know, that what we've developed together over the years. I'm gonna send that out like as you get to like a year or so before retirement. Don't you forget. Look, that's why I meet with y'all. I had a meeting the other day and y'all do some major moves. I mean, I feel like I have to talk to y'all every day. You know, one of the members was like, oh, I refinanced last month. I said, well, Tag, I wish you had sent me the, you know, let me look at the numbers before you just, oh, I was moving so fast. I didn't have time for all that. We got to make sure we take time. The thousands of dollars I know I could have saved her. Thousands. And it's not for me. It's because I want you to keep that money so you can invest your money versus giving money away. We can't afford that. It makes sense? No. And I think sometimes like, you know, it's just feel like, well, I gotta, you know, I don't want to be running, you know, stuff by her all the time. But, you know, why not? If I'm gonna do it, like, you know what I mean? Why not? Does that make sense? You feel me, Miss Reagan? Because I think that, you know, if anything we don't get, the love that we deserve. It's not like people are going out of their way to try to serve us. That's why I feel like at AfroEconomics, it's important for me to do that. You know, I really want to show you exactly how you deserve to be taken care of. I don't think that you should be rushed. I think that you should be, you know, given the opportunity
Right.
to look through your things. You should be, you know what I mean? Like you should be able to say, well, I'm gonna, you know, like the other day that and Pat, you won't mind me saying this, you know, she was looking for a new vehicle. And I think it even surprised her on how much money she was able to save. Would you agree, Pat?
Would definitely agree. And had I not reached out to JB and she had not been involved in the transaction, I really would have been taken. And I never thought that I was that naive.
I did, you know, and me neither. But I was like, I want to be the advocate that I never had. And I was calling this morning about a client that's disabled, and the bill collector is doing a judgment against him for, you know, more than he could possibly pay or should pay when you're disabled and you didn't have any plan on becoming disabled. Like, I know that we should not be living in a country, and that's what I told them. I was like, I'm working as a consumer advocate to our Black community. There is absolutely no way you should be doing a judgment against a disabled person. And we live in a country that is doing everything they can to look out for everybody else. We gotta, like, you know what I'm saying? So we gotta look out for yourself. You gotta look out for yourself, because you can't take it back. Like, once you sit there, you lock into an interest rate that's way too big, you know, and you know, that's been the challenge. That's been the challenge for our community. You know, they've given us these opportunities to buy houses and get cars and do things. But if we don't understand the numbers, like Ms. Davis was saying, look, because they wanted the price to go up. And I'm like, nah, actually, they wanted it to go down. And because the small investor is making it go up, they're mad. And they shutting the whole thing down, taking their balls and going home. Isn't that something?
Mhm.
Mad because we making moves. So you better know how mad that lady got when I told her that she ain't paying this. She's not paying this. And matter of fact, I'll make her leave your dealership because she is not paying that. I will ruin her
Yes, she
day.
did.
Then I said, I will ruin her day. She will
Yes,
be,
she did.
she will be there loving that car. She's not paying it. The next time she did, that finance officer came back with an offer better than what I demanded.
Yes, she
They
did.
were wrong. They knew they were wrong. Oh, how about this? Look, then their ego gets in there. I said, yeah, sounds good. Let's look at the paper. Still looked at the paper. Let me see it in writing. Don't
Yes.
back down. We can't get it back. We can't get it back. You know what I'm saying? But it's like, there's no time, there's no way for us to back up. Like, there's no way for us to, like, you know, let up, or that's okay, or this or that, you know.
Well, you
JB,
know, some people are embarrassed once the ship has sailed. You know, it's like you're just embarrassed.
That's
that,
right.
You know,
That's
they
right.
don't want to talk about it.
And that's what I always say. That's what I would say. Don't show it to me after the impact. Like, she
Right.
called me during, and that was a Saturday.
During the transaction,
I
the
stopped.
finance manager
that's
even
right.
made the statement, maybe you should have had her come in with you. Because I made so many calls, I was not going to sign until
for
JB
you.
said, this is what you need to sign.
And she some though, don't try to be smart. Maybe she should have come. And I told her, I said, I would have come, but I'm working too, just like you. I'm working. And this is my work. Well, you know what I'm saying? She's gonna try to make the customer feel uncomfortable because she's taking care of herself. See, that's how they close us in.
Yeah.
That's how they get us.
That's the strategy. Yeah,
And that's when you walk. And that's when you walk.
That's right.
JB,
Mhm.
can I ask you a question, please?
Sure.
The interest on the car loans, is that front loaded? How is that done? Is it, or it's, I know it's all combined into the payment,
Mm.
but if you make extra principal payments on your car loan, how does that work?
I know
Yes.
that you can, but the car loan is considered simple interest.
Yes, that's
And
correct.
so
Oh,
you,
okay.
so you definitely, but you can still look at it that same way,
Okay.
but yeah, because the first, yeah, so since it is simple, like the beginning, most of your payments are interest.
Right.
So when I had a client that she was refinancing and her car, and I was telling her that she should be careful because, the interest rate wasn't that different, and then the new car interest rate is so much lower. And so
Mhm.
she was refinancing at a higher interest rate and trying to get her payment down. And then she called me because she was scared that she was losing her gap coverage. And then I told her, like, don't do this. You know what I mean? Go home and let's talk about this. But you don't need, she told me when she talked to me a week or so later, she said, yeah, I did it. She ain't never called me back.
Oh, wow.
She said, yeah, I did it. And she's on fixed income. What's wrong? What's
Yeah.
wrong? The but like because I'm not gonna be living always. You know what I'm saying? Like you know what I'm saying? What did it, what are they gonna do? I'll be gone. Like but um we deserve so much more. We just deserve so much more. Mm. So let's look at some other terms. So the cash, we need to understand, cash is anything that's totally liquid. So cash needs to be like a CD is not cash. Really, because if it has a penalty in order to get to it, you know what I mean? That's not really cash, even though they might put it on the statement as this is the money that you have in cash. But if it can actually be less than what I put in it, no, FDIC, that's what I consider cash. Liquid, liquid would be like a CD because like you could get to, but you still, if you gotta pay a penalty on it and you gotta keep it, it's not really that liquid unless it's a penalty free. Short-term bonds, money market accounts, that's cash. Bonds, bonds are when you're actually loaning money to a company. So you're loaning the money and they're promising to pay you interest. But you know that if you're doing bonds that are traded in your brokerage account, that bond can actually increase and you can make capital gains on a bond. Did you know that? Like we can put $10,000 in a bond and then the interest rates in the market go down. That bond that you have at the higher interest rate immediately increase in value. So say it went from 10,000 to 10,500. You can sell that $500 is a capital gain, but it still has to pay you interest. But it's not a capital gain, until you actually sell it and take it at that 10,500 versus 10,000. But so bonds have that sensitivity to interest rate and they can be, traded and get, to get gains, or it can lose value. If interest rates come up, what happens? The demand for your bond is gone down. So if you have to sell a bond right then, you're going to have a loss because it might be only worth 9,500.
JB,
Interesting, right?
yeah. I think for me, there is always this fear that once you get older and you've invested in the market, and then you still end up having to pay a whole heck of a lot of taxes because you don't have enough money to avoid the taxes, and you're just like right in this middle, right in that
Mm,
middle where those are the folks who always get hit with taxes.
yeah. And that's the overwhelming bulk of Black professionals, right? Like
Yeah.
you work to get all this. Like I have clients now who are hitting 72.
Mhm.
And now they have a mandatory required minimum distribution on their IRA.
Right.
And, you know, because you think when you're 59 and a half, like you're like, oh, I need this money. I can take withdrawals without penalty. But if we're working it right, there's coming a time when you're not going to need that. You're not going to need it and you're going to be forced to take it. And I love that. I love that when that happens to my clients. And they go, well, what do I do with this? Let's do something with it. But you know, that's a beautiful blessing, you know what I mean, to have. But yeah, the IRS is forcing you to create income so that they can get the tax revenue.
Yeah, and I'm doing everything I can
But
to
don't
not.
complain because you're gonna sound like you know what I'm saying? But it's amazing, like it's a conflict, there's a conflict there. What did somebody tell me today? I think it was Mr. Richardson told me I was a secret Republican. I was like, I am not. He said, I'm not in a political party. But he was saying that he said, JV, it's hard for you not to be when you are in finance. But
Yeah.
but it's both parties.
Mhm,
Don't slip. Like they're both very rich. There's
mhm.
no evidence to support that the Democrats are poorer than the Republicans.
No, you're right.
None. They've got a whole bunch of millionaires and billionaires in both. I think Warren Buffett, like, you know, is a Democrat.
Yeah, he is.
Yeah.
You know what I'm saying? Like he's
Yeah.
one of the biggest in the world. Like I know the guy over Amazon is a Democrat.
And
He's a
Oprah.
Jeff
Oprah is
Bezos.
a Democrat. I mean, seriously. So it's like, you know, we have to realize that they have to actually keep these people happy too. So as soon as Biden got in, the market didn't care because they know Joe Biden well. They know
Mhm.
how he voted. They know he's about the corporate community. They know. They own him. We ain't gotta worry
That's
about
right.
that. We ain't gotta worry about that. You don't see him pushing that livable wage that hard.
Mm-mm.
It was a nice thing to say when he was like running, but let's see, because everything else, like this, everything that he's been pushing really don't cost people that much. Corporate America loves opening up the borders. It's much cheaper to have labor over there than in here. They don't want to have to hire us.
Yep.
So all it is, like those are major good corporate moves. They don't care. They good.
Yeah, he's very corporate.
Very. So it's like, you know, so you know, those of us who are participating, you know, but look at the GameStop thing. What in the world? Like, and then the lady from Massachusetts, she spoke and she said, yeah, we're gonna have to look into this. I'm telling you, they are going to get on social media. They do not, like, these are the representatives that are going to try to present to the average person that because these people united and made these hedge funds lose billions of dollars, that we're supposed to care.
They better be ready for a fight because the actual person today, the consumer, especially when they dive into this investment world,
Mhm.
much smarter than back in the day. So,
Mm.
you know,
They're gonna get away with it because corporations own them.
yeah,
They shouldn't even be discussing this. They shouldn't
yeah.
even be discussing it. If we're capitalists, hey, to each his own. How are you gonna say we have freedom of speech, but you're gonna say that you have a problem with
Yep.
social media saying what they should buy?
That's right. That's right.
That's sick. That is sick. And it all started, you know what I mean, once we allow them to do something to someone. And I always said that, like, when you take away a freedom from my enemy, you take away a freedom from me too.
Yep.
And that's what happened. When they shut down, they said, oh, we shut down Twitter on Trump. We shut down Facebook on Trump. They certainly can shut it down on us.
They sure can.
Shut it down.
Yep.
Yeah, I've been suspended on Facebook.
Right, and you know what I'm saying? You're a minister. That's amazing. I didn't know that, but there's a whole bunch of ministers that got suspended on Facebook. They, they think some people and the Facebook people, and many of them, I've had many people say that Facebook sees talking about God as hate speech.
Wow.
And when they can prove that there was that opinion, then they'll take it down. And you're going to see that move. You're going to see it continue. All they have to do is report you. They're over there talking about Jesus. It offended me. Isn't that something?
Yeah.
Nothing new under the sun.
That's new. That's a new week I could live without. Like, that is crazy. I just want to be able to say what I want to say. And you can't. So then let's look at the more terms, and I'm gonna let y'all go. Thank you, y'all, for just being the best. So we want to also, we did asset allocation. We talked about the PE. We talked about cash. We talked about bonds. We talked about stock. What about like mutual funds? Mutual funds versus exchange traded funds, even. Mutual funds, why they're, they started out with like the fund, and they had money managers for the fund, and then the fund had the fees for the money managers into the fund. Like, so then all of a sudden they said, well, what about if we just do exchange traded funds and allow your advisor to be your money manager? And you can save on a lot of expenses. See, because when you're looking for performance, if you can get, to an advisor, but see what happens is what the Trump's argument was, that if you limit only investment advisors to helping people with retirement, then you're only going to have the rich people, because the only people that want to work with the little man are the ones who are charging the mutual funds. And it's so true, y'all. I don't know of any other registered investment advisory firms that focus on no asset minimum. I'm approaching 30 years in this business. I'm the president of the firm. I don't know anybody with this level of experience that will take an investor that really doesn't have any money at all. Anybody else like this will be on the access that you have for getting to ETFs on an institutional level. Like the door that I'm offering it doesn't exist. Not that I know of. Like, I hope they see this video and they call me and they go, yeah, sis, I'm doing the same thing. But we haven't found it. So Trump is saying, so we better leave those mutual funds out there, because ain't nobody else gonna help them. And that's so true. Like, not just us. Like, people don't want that. The small investor, is at a challenge because people don't want to help them. They're more expensive to help. Small investors need more maintenance. They need more knowledge. They need more investment. They take more time. So when people say, my minimum is $1 million, it's because they know the person with $1 million is more mature, more intelligent, has more knowledge, and that's something. More experience, more likely to leave it in, is going to appreciate and know what a fee-based account is and what it's offering them. But that's what we're doing, and that's the blessing of you supporting AfroEconomics, so that you and everybody else, can have access, to something that they won't even appreciate until later. And then have you heard of target date funds? The target date, they're in most of the work plans now. I think they even have it in the government TSP, right? They have like the 2030 and the 2040 and the 2050, the 2080. But the farther the fund actually just is saying, when do you want to retire? And the closer you get to that date, they're adjusting the asset allocation for you automatically. And what I don't like about it is it's not assessing your risk. Like one of the first things that we do is I'm regularly checking your risk level. So there is no automatic changing just because you're getting older. You might be like Mr. Bozeman and you get more aggressive as you get older. That's right? So you don't, you have to take everybody, but that's the advantage of having your own advisor versus like, because we can get in there and we can look at that and we can actively manage it. But if you don't have the support, shoot, it's better than not doing anything, doing it that way.
Mm-hmm.
So I'm glad they added that because too many people would just sit there and cash or something.
Yep.
Right? So any questions before y'all leave me? Can you believe it? It was
No,
back.
thank you very much.
Yeah.
Oh, thank you very much. It's back to school night, right?
Yeah, exactly.
We were doing that thing. We were having it. I really appreciate y'all so much. Yeah. Yes, indeed. And you know that I'm just an email away. Always. jb@jbbryan.com. Let me or Pat know. They have we have members only on Friday morning, the business network at noon. The business network this Friday is stopping stereotypes. Being an accomplished Black business owner and how we can stop the stereotypes against our businesses. So I need y'all to come out and let's take that seriously. Excited.
Thank you for the information, JB.
Thank you.
It's my pleasure. It's my
Good night.
pleasure. Thank you. Thank you. Thank you. Have a good one.
Night, everybody.
Okay.
Thank you.
Good night. Good night.
Keep smiling through COVID.
Thank you.
Don't let it win. Don't let it win. We got this. We've got it. We got it.
Okay, have a great week.
Thank you. Thank you. Thank you.
JB.
I'm trying to come back to you.
Good evening.
I know the voice though. Angela, how you doing?
Hi, where's my Roy Ayers?
Oh, I know. Did you know what? Did you hear me the night I played it? I played it the night that I promised.
Oh, I don't think I
was in that night. Exactly.
Oh, what's the
right? Why did he sound so quiet? I think it's down here.
JP, how can I watch it again? Can I go to the website and do you have it posted? I can watch it tomorrow because I had some distractions.
Definitely.
Okay.
I'll have it on YouTube.
Oh, wonderful. Yeah.
Thank you.
I appreciate that. And I look forward to we hooking up tomorrow evening. So
oh, beautiful.
Hopefully I have some I'm gonna hopefully prayerfully I have some news on the tax situation for you.
Oh wow.
Jake, I don't know what to say. I mean, short of just going over there and